Now, here is a big kahuna example. We'll dive in. Same process as before. So, Mighty Construction Inc. entered into a construction contract to build a new warehouse. Here are the details of the contract. Now, contract price, this is our revenue. Estimated cost is 8 million. So our gross profit immediately we can see is 1 million. The start date is August year 1. Finish is November year 3. Balance sheet date is December 31st. Awesome. Now with these questions, I immediately rush to cross out unnecessary information. And what is unnecessary here? Remember, this is a common trick. We are in revenue recognition for accrual basis GAAP FAR exam, right? So what is not relevant? Well, what is cash basis? Cash collected during the year, we don't care at all. That's important for cash basis revenue, but that is a total distractor for us here. And in addition, progress billings. That has no impact on what we recognize as revenue. Sure, that has an impact on other accounts receivable and cash balances, but we don't care at all. Now, here's a schedule, right? This is given information. Costs to date. So in year 1, we had 2 million of costs. In year 2, we had a little over 5 million, almost 6 million. And then in year 3, we had 8 million. And you see, our initial estimated cost was 8 million. In year 3, our total costs were 8,100,000. So as I was mentioning before, we've got some changes in estimates, which is fine. And I'll show you how to account for those. I'm super analyzing this as well before, so it just makes sense. Like $0, right? At the end of the project, you're not going to have any estimated cost to complete. Like it's done. There's nothing more to be done there. And for this question as well, it will have to tell you when is that estimate being changed. In this case, the estimate is going to be changed in year 2. That is given information. I wrote this question. I didn't include that there. So it's going to happen in year 2. I was going to walk this through with you anyway. I figured I'd just mention it. All right, it's going to happen in year 2. Let's run through what happens. Here is our solution. I put the contract price and estimated cost up here for reference. And then in year 1, just like we did before, right? How much do we recognize? Well, 2 million of costs were completed in year 1, right? Cost to date, 2 million. 2 million of 8 million. Okay, that's 25%. Nice clean numbers, right? Fortunately, we don't stay clean numbers all throughout. So how much revenue is recognized? 25% of the 9 million of revenue. That gets us to 2,250,000. And that's the revenue recognized. Now, what about the gross profit recognized? Again, you could do it before or after. Here they do it after, or I do it after. It's going to just be the 250 because you had costs of 2 million. You had revenue recognized of 2,250,000. So gross profit recognized is 250,000. Now, if this was in a sim format, sure, it might ask for both of them. If it's multiple choice, probably just going to ask for one, but important to know the difference and how to calculate both. All right, as I mentioned, in year 2, we changed our estimate, and we saw that now, we really have $8,100,000 of costs. Awesome. And given is that total costs were this not as clean number. I'm quite a fan of clean numbers and apologize for giving you a little bit of a messier one, but that is what they're going to do on the test as well. We divide those out by each other and get to our 72%. So now we have 72% of costs completed. All right. Now 72% of 9 million. And then we subtract out the revenue that was recognized before because we don't want to double count. That gets us to total revenue recognized solely in year 2 of $4,230,000. So far, what have we recognized? We've recognized 2,250,000 plus 4,230,000, which is a total of 6,480,000. Now, gross profit, we are going to take our revenue for the period minus the costs, and that gets us to 398,000. Again, another year complete, another year moving on. And yeah, for the change, remember, we just apply it here like we did. We just use the new number instead of the old number. Now, year 3, 100% complete. We are done. Let's tie it out. Well, our revenue is still at 9 million. So 9 million minus all prior recognized revenue gets us to 2,520,000 of revenue recognized. Now, if we add up all these together, they'll get you to 9 million. So that's another check. Definitely check yourself there. And then we take our revenue minus our costs, and that gets us to our final gross profit recognized in year 3. I think this is a great textbook example. Be quite familiar with this. Sure, there will be other tricks involved, which we'll cover in other multiple choice question explanation videos. This is a phenomenal way to understand and grasp what you're seeing.